Will the Federal Reserve refuse to cut interest rates and also intentionally allow a stock market crash to occur and maybe go on for a while before they did more intervention with QE so that they could intentionally hurt President Trump's 2020 reelection bid? So President Trump has been criticizing the Federal Reserve for more than any other president publicly. Now, the criticism is a lot different than when he was just private citizen Trump on Twitter and when he was candidate Trump. I think a lot of his points when he was private citizen Trump were talking about the Fed creating bubbles. We're talking about the Fed creating devalued currency and inflation. Even candidate Trump called in the debates against Hillary Clinton, the Fed, what they were doing, a big fat ugly bubble. However, and this normally happens with politicians, once they get into office, it becomes an entirely different tune. And Trump was not criticizing the Fed nearly as much until about the last 12 months, especially once Powell did that last rate hike there in December. Trump has just gone off. And it seems like, guys, it's almost been every day, Monday through Friday, Trump has been criticizing the Fed. Well, now and by the way, guys, I'm not in favor of any central bank having this much control. I'm a limited government libertarian. Let's get governments a lot smaller, including the U.S. I've been accused of, you're in favor of an American empire and all this other stuff. No, I want the U.S. government drastically downsized and reduced. I do not want a very powerful welfare warfare state. And the best way historically to have a welfare warfare state is with digital fiat currencies, now that with the upgraded technology and a central bank. Although in the past that was with coin clippings. Governments did a lot of ways to cheat their own citizens. They did coin clippings. They clipped the coins on gold and silver. The Roman Empire even took copper or other cheaper base metals and they dipped them in silver. Governments have always figured out a way to steal and lie and cheat and change the rules. This is nothing new, although now we're looking at potentially cashless society going forward. So President Trump was heavily criticizing the Fed when he was just a private citizen on Twitter. If you go back through his tweets many years ago, and also as candidate Trump, he was criticizing the Fed, although now I would say the criticism of the Fed is different, and the Fed does not like this. The mainstream media, who is probably encouraged by the Fed and the large Wall Street banks, does not like this. The mainstream media now has really ramped up the narrative in the last couple months, especially, it seems, blaming President Trump and his tariffs and trade war for the U.S. economy slowing down. Well, the economy was already slowing down with stagflation and taxes. And yes, I'm sure the tariffs are hurting the U.S. consumer too. But the dollar index right now is at, let me pull this up. The dollar index it has not held 99. It's at 98.4. So it stayed above 98 still, although for a year now it has not held 98 for any considerable length of time. But more worrisome for the people in the Trump administration, for the people inside the Treasury Department, and probably the people at the Federal Reserve, since they came up with this measurement, is the trade-weighted dollar index, which is at an all-time high at 131.038 when we're doing this live stream show on Thursday, September 5th, 2019. So I'm 100% sure that the White House, that the Treasury Department here in the United States, here in Washington, D.C., is getting constant phone calls Monday through Friday from foreign governments, their Treasury Departments, from foreign central banks, from large foreign corporations, from lobbyists in foreign corporations, complaining that the dollar is too strong, that they need to weaken it. And I'm sure that's part of the reason why Trump wants these rate cuts. He's aware. He wants a weaker dollar. They want to control devalue for a number of powerful reasons. There's a number of different reasons, at least a handful, why Trump wants a weaker dollar. I disagree with him. I don't want a weak dollar. In fact, I think what is happening right now is hurting China a lot. I've documented that, and that the U.S. could use that as negotiating power in a trade deal against China. But I don't know how that's going to be used, if they're going to do that or not. We'll see. So the mainstream media, like I said, is ramping up the blame the economy on Trump coverage. there was two interesting stories that came out in the last week or so. One of them was an Axios story saying by Dion Rabuin from August 29th, saying Fed tweets show Trump doesn't understand central banking. Actually, if you go back from Trump's tweets when he was private citizen and also candidate Trump, he very clearly understood what the Fed was doing with devalued fiat currency, weakening the dollar, creating inflation, creating asset bubbles, creating a stock market bubble. He understood it completely. But that does not fit the bullshit narrative, the lies, the propaganda of this mainstream media. And then CNN, which is just propaganda news network. I forgot the jokes for Cartoon News Network, CNN, Cartoon News Network, CNN Business just put out a story yesterday saying the White House says the Fed is the number one problem facing the economy. That's not true, by Matt Egan at CNN Business. And I would argue the Fed is the main problem. Global central banks have just created massive distortions. It's not just the Federal Reserve, it's the European Central Bank, the Bank of Japan, the Swiss National Bank, the People's Bank of China. All these central banks are creating enormous problems. So if you guys go back through my archives, remember when I said candidate Trump was running this rhetoric criticizing the Fed. He knew running on a populism platform, that would get libertarians who were either independents or people who may have voted libertarian for the hopeless candidate Gary Johnson, who I voted for. I doubt I would never vote for him again. But Trump was able to get a lot of people who were independent or kind of sitting on the fence there. He was able to get a lot of libertarians to vote for him in the 2016 election using that exact rhetoric, criticizing the Fed, talking about inflation, talking about asset bubbles. And he was really, I remember this distinctly, as he announced his candidacy and he was starting to criticize the Fed more in 2015 and then throughout 2016 in the debates and on Twitter. And I was covering this on my channel. He was really ramping up the criticism of the Fed. And I was telling myself, you know what? The Fed's going to remember this. They're going to remember this. So if he doesn't play ball, if he doesn't kiss their butts, if he starts criticizing them heavily, if he starts calling them out, they could defy him and pull the plug. They could let a stock, I was talking about this back in 2015, 2016, that the Fed, if they wanted to, they could make him a one-term president, and they could just create a stock market crash, no QE, wait for the pain to set in for 6 months, 12 months, maybe a little bit longer than that before they intervened again. Although on the other side there, the U.S. Treasury, then the tax revenues, the capital gains taxes would blow a hole in them. Because if you go back on the chart on the St. Louis Fed website that tracks the annual U.S. government tax receipts, the amount of tax receipts in 2008 and 9 during the financial crisis, it went from around $2 trillion, it dropped down to $1 trillion. So I don't know if the U.S. Treasury, the budget, could handle a $1 trillion shortfall. That would have to mean the Fed would have to step in, and we're already anticipating the Fed's going to step in at some point in the near future, maybe in the next couple months, and restart QE and start to buy bonds. But that would mean the Fed would have to do an even larger bond buying program. Just crazy stuff, guys. We got the Jim Bianco, more crazy stuff. This is the new normal now. We have an article from Jim Bianco talking about negative interest rates threaten the entire global financial system. I agree with him. The amount of collateral damage and distortions that negative interest rates are doing already in the European Union is just insane. And yet more European banks are doing that. I feel really sorry for my European Union listeners who just want to put money in a bank account and have it be quote unquote safe there and maybe earn a little interest. Because they're trying, the people in power, the central planners in the European Union, the bankers in the European Union. I think the bankers at this point, a lot of them, if you went and had a drink with them off the record, if you weren't media, and you asked them their real opinion of negative interest rates, I bet you a lot of these bankers would say, yeah, these are garbage. They're really hurting us. There's just a ton of evidence that even the banks in the European Union are getting hurt by the negative interest rate policy. So even though they're charging their depositors more, they're not benefiting from them. Another thing, and I forgot to mention this yesterday on the Kyle Bass thesis, that I believe the Bank of Jinzhou not getting help on their dollar bonds. I think who's on that other side of those massive amounts of forward dollar swaps that are being sold by China to try to stabilize their currency. They've been increasing amount of them. Guess who's on the other side of that trade, guys? Guess who are the large banks who have been selling the Chinese banks who are ordered by the Chinese government to do that? Guess which banks? My educated guess would be those banks would be your favorite bank, Deutsche Bank, and also HSBC Bank probably, and a number of other European banks, because it's around the euro-dollar area, and Jeffrey Snyder was talking about that in his article, and the euro-dollar system is not as important as it used to be. It's only about $16 trillion, according to Jeffrey Snyder, and the amount of the forward dollar swaps are a lot larger than the euro-dollar market. So just, the European banks, guys, are a ticking time bomb. They have really bad counterpart. The European banks are in a lot of problems in a lot of different ways. And the German government can't totally bail out Deutsche Bank. I think Germany's GDP is, what, $4 trillion? And Deutsche Bank's derivatives problems are way more than that. And the European Central Bank is doing nonstop quantitative easing and rate cuts. Can I talk about the Italian banks? Yeah, the Italian banks are a mess too. I don't think the Italian banks have nearly the derivatives problems that Deutsche Bank does, but the Italian banks have massive amounts of bad loans. I've heard the bad loans of Italian banks are over 20%, that they have like 30% or more non-performing loans. And the Spanish banks are in bad shape too. My European, I feel really sorry for my European Union listeners who just want to put their paychecks into a bank and be safe with savings and not get charged negative interest rates. It is a shit sandwich that they're being served. There are some ways around that, some unconventional ways around that. I would suggest, this is not financial advice, just my opinion. Opening up a gold money account, it's not a real bank. So if you own a gold money account, they have over $1 billion in physical gold and silver under management, and you could have a gold-based debit card. There's the Vaulted app, which David McIlvaney of McIlvaney Financial started. There are unconventional, you could open up a stock brokerage account, which probably doesn't use derivatives, maybe like an interactive broker's account, but people are going to have to be creative if they don't want to get charged those negative interest rates. It really sucks. The Real Vision video, my guess is they've been releasing a lot of the content behind the paywall that was filmed 8 months to 12 months ago. So that free video from Real Vision is probably recorded. I saw that. I have a Real Vision subscription, so it probably was the one I saw where Grant Williams was in Florence and was in Venice, I think. So, and then on top of that, with the Fed comments, you have the former New York Federal Reserve Bank President Bill Dudley, who on August 27th, he wrote an op-ed on Bloomberg talking about the Fed should not help Trump, the Fed should not cut rates anymore, and the Fed should do what it can to get rid of Trump for the 2020 election. I'm paraphrasing what he said. And then he just came out yesterday and he doubled down on the same comments. So unfortunately for former Goldman, this is a Zero Hedge article from yesterday, Deep State Dudley doubles down, explains what he really meant in scandalous anti-Trump op-ed. Unfortunately for former Goldman Sachs managing director and New York Federal Reserve President Bill Let Them Eat iPads Dudley, that is a saying he is not familiar with. There's a saying when people have a hole to stop digging. If you've dug yourself a hole, to stop digging. And 1 week after his stunning Bloomberg op-ed, in which he advocated the Fed to prevent Trump's 2020 reelection by sending the economy into a recession, resulting in a brutal response from virtually everyone who slammed Dudley's musings as the final proof that the Fed was in fact a political animal. Yeah, so that's the other thing I wanted to bring up about the Fed. The Fed claims to be independent. The Fed claims to be without politics. It's bullshit. Read Danielle DiMartino Booth's book, Fed Up. And she talks about all the Bernie Sanders bros that are there right before she left. And there's over 3,000 PhD economists that are grossly overpaid with pensions and don't get fired for making mistakes at the Federal Reserve. And almost all of them are hardcore Democrat. And Ben Bernanke, who claimed to be a registered Republican, he's been defending FDR more and more. And I really don't know any Republicans who like FDR. It's weird. There's very few Republicans I know, and I'm friends with a good amount of them still, before I became a libertarian a long time ago. And they never defended FDR. FDR, in my opinion, FDR was one of the worst presidents in U.S. history. Even though he's worshipped as a demigod by the generalist history books. The generalist history books say nothing but positive things about FDR, and I think he was one of the worst couple presidents in modern U.S. history. But he's considered by generalist historians, generalist American historians who are almost always Democrat or almost always socialist, to be a top 5 U.S. president in U.S. history. So back to Dudley. Dudley said he wants to advocated for the Fed to prevent Trump's 2020 reelection bid by sending the economy into recession, resulting and refusing rate cuts, resulting in a brutal response from virtually everyone who slammed Dudley's musings as the final proof that the Fed was in fact a political animal. So this is very similar to the movie Fight Club, where it's rule number 1. The first thing about Fight Club is you don't tell people about Fight Club. So the first thing about the Federal Reserve is you don't tell people what really goes on at the Federal Reserve. So Dudley made a mistake on that. His hatred of Trump, his globalists, his champagne socialism. Now that he's rich, he probably doesn't care about money anymore. So he let some of the truth slip, and that's a big no-no in the circles here. For the political elites, you don't let truth like that slip too often. It's a bad idea. So he wrote another op-ed, I believe. Let's see here. He wrote a letter in rhetorical question and answer format. Wow. So he had to up his game in douchebaggery, beginning by asking himself what motivated him to write the article. His answer is twofold. So he wrote himself a rhetorical article. I got to read this. First, President Trump's trade war with China was increasing uncertainty. Increasing uncertainty about how global trading rules would evolve, what tariffs would be imposed, what changes firms might need to make to their global supply chains, and what the downside risks might be for the U.S. economy. Yeah, because the status quo was benefiting scumbags like you, right? Just a few days before the article was published, the president ordered U.S. firms to pull out of China. Second, the president continued to attack the Federal Reserve and push it to ease monetary policy further. He emphasized that the Fed, not the White House or its trade war with China, should be blamed if the economy faltered. His attacks on the Fed included characterizing Chairman Jerome Powell as an enemy, on par in his view with President Xi of China. As Dudley sought, the combination of the trade war and the president's attacks on the Fed threatened to put the central bank in an untenable position, one where Trump was shifting responsibility for the downside risks from his trade war onto the Fed. And Dudley thought it was an important issue worth exploring. What Dudley means here is that whereas traditionally the Fed has been commended for bailing out the world, they crossed out banks in the Zero Hedge article, by throwing trillions of dollars at a problem and hoping it goes away, even though sometime in 2016 it became clear that this approach was doomed to failure, and so it would be great to have a hapless scapegoat in the White House, someone such as Donald Trump, to take the blame for decades of disastrous monetary policy, which has resulted in the world's biggest asset bubble in history. What happened next was not part of the program, namely Trump flipping the table on the Fed and making it the key catalyst for the upcoming recession. So again, the Fed does not like being called out in public like this, does not like criticism. This stuff never happens. I can't remember it happening. I can't remember any other president doing anything like this in my lifetime. Alan Greenspan just also said that it's only a matter of time before negative interest rates spread to the U.S. Quote, you're seeing it pretty much throughout the world. It's only a matter of time before it's more in the United States. I hope he's wrong. Gary Johnson was overshadowed by Bill Weldon. No, Gary Johnson was his own worst enemy, too. Gary Johnson was high all the time and could barely focus or concentrate. I have no problem with an adult who's made a lot of money being high all the time, except if you're running for a political office, presidential candidate, because you're not going to be able to speak coherently on any subject. Return-free risk says central bankers can't claim success for their policy response to the 2008 crisis until we have a normal recession and recovery without similar extreme policies. No, I disagree with that. They've already claimed success. Bernanke already got the extra money, the awards, times Man of the Year. He got all the accolades. He got all the consulting gigs. So he's already, even though a lot of this is Ben Bernanke's fault, because he did trap the Fed with all the different QE programs before he left. Once the Fed went to QE2, QE3, it was over. There was no way they could reduce the balance sheet because the corporations with the lower interest rates with ZIRP, zero interest rate policy, the corporations just started borrowing like crazy. And the corporations loaded debt onto their balance sheets, started doing share buybacks with debt, started doing leverage buyouts with debt, and it was only then, once that happened, a matter of time for the next crisis. Yeah, this is part of the problem where you have the people in power. They do things that sometimes take 10 or 20 years to figure out how bad things were, and they're claiming it was a success a year or two later. So you have to look at things through a longer time frame lens. And then you can figure out that, my God, the stuff that they did to, quote unquote, save us in 2008 didn't really save us at all. It made a lot of things worse. It made the wealth gap between the rich and the middle class and the poor even worse. Yeah, GE guys, well, GE collapsed in 2008. GE Capital collapsed. It was bailed out. So GE was bailed out in 2008. If you go back and look through the stuff that was released back then in the TARP program, GE Capital, and I looked through this on Wikipedia, GE Capital was named as a systematically important entity, which means that they were trying to ring fence it to guarantee the derivatives and the other garbage that was collapsing. So GE already got bailed out in 2008. Will GE get bailed out again? That's a good question. It looks like Stanley Druckenmiller is betting on another GE bailout. If we see Warren Buffett come in, guys, with another, if Warren Buffett comes in with 10 billion or 20 billion and he gets preferred shares and stock options and all this, then we'll know for sure that the next GE's definitely going to get a bailout. So I would watch to see if Warren Buffett's going to get a sweetheart deal, because he's so politically connected at this point, he would know. So, do you think that the Fed is intentionally not going to cut rate cuts for a long time until the 2020 election and try to really hurt or make it almost impossible for Trump to get his 2020 reelection bid? And it looks like the mainstream media was not for a while blaming any of the economic problems on Trump until, I would say, the coverage has really ramped up the narrative in the last couple months, where the mainstream media now is blaming any economic problems in the U.S. on Trump and the trade war, because they realize that that's one of the points, because the official government data was saying that the U.S. economy was doing well until really 6 months ago, especially once the last rate cut. The last rate cut almost collapsed the corporate bond market. The last rate hike that the Fed did in December almost collapsed the corporate bond market, and the junk bond market almost froze credit up. And that's when Trump really started to criticize the Fed. It's increased more and more and more. Good question by Sparsil. Jason, do you think the U.S. has allowed the dollar to strengthen knowing that the Chinese dollar swaps would hurt China and maybe use that pain to strong-arm them into a trade deal? This is a superb question, and yes, I think they are using this. And how do I know? Because Kyle Bass disclosed this. He's disclosed this on his Twitter for a number of times in the last couple months. He even put that article on Seeking Alpha that I told you guys about from 2015 called China's Debt Swap Addiction. And that explains how emerging markets, that was the article I screwed up on yesterday on the show, where I was looking at the Jeffrey Snyder article for the Brazil reference, and it was actually in the Seeking Alpha 2015 article, China's Debt Swap Addiction, going back through financial history, showing that Brazil and other emerging markets that had done these forward dollar swaps, sold a bunch of these things, their currencies had cratered. And they had had big problems trying to gamble on a weaker dollar. So Kyle Bass has disclosed that he is, I'm not sure if he still is advising, I believe he is. I don't speak directly to Kyle Bass. Occasionally I get some information second or third hand about some of his views, and then I monitor his Twitter and also any interviews that are released for free. And he has disclosed publicly that he was advising, he said he doesn't like Trump. This is what Kyle Bass said. He doesn't like Trump. He didn't vote for Trump. But first and foremost, he is an American, and he's not shorting China. His view, he is America first. That's what he cares about. He cares about the U.S. economy, Americans first. And so he said if the Trump administration wanted him for trade negotiations, he would be giving free trade negotiation advice. He would work with them for free. So I believe he's been working, advising the Trump administration on trade negotiating deal probably for the last 3 or 4 months. I said Dudley did tell the truth. But the first rule about Fight Club is you can't talk about Fight Club. Finance and Economics says a lot of businesses are being sustained by low interest rates. Yep, I 100% agree. They're zombie companies, which means that they need lower and lower interest rates to keep refinancing that they can never pay off the principal. Oh, thank you guys for the super chats. Thank you, Benjamin. Thank you, Rob. And thank you, Tarkinas. Tarkinas has a question. What are the odds of the Fed not cutting rates? It's a good question. I haven't looked at the... So, Tarkinas, I'll tell you how to look that up yourself. I haven't looked at the numbers. You could look up Fed funds futures. So, if you want to look this up, if you want to monitor this yourself, monitor the Fed funds futures. And you should be able to monitor this yourself. And that will tell you the odds of the Fed cutting rates. Okay, someone put it in the live chat. 96% for a 25 basis point or quarter point rate cut. Now, see, Trump's not going to be happy with that. And even if there is a 25 basis point rate cut, it might not stop the dollar from rising. There are a lot of problems. I've tried to stress this with you guys. There are a lot of problems with the global economy. European Union, China, emerging markets. There's a lot of problems. And you could still tell with the tape action, with the price action, that there is money coming in to the U.S. Although the 10-year bond did rise quite a bit today, it's up 7%. Gold stocks actually went down a lot. There were some gold stocks, there are some gold stocks. I think First Majestic Silver had the worst down. First Majestic Silver today alone was down $1.04 per share, down 9.19%. Wow, that's a big drop. And there were other gold stocks down, like Sandstorm Gold and others, down 6 to 8%. So the quality gold companies and silver companies, the quality ones, all got the hammer today. If I had more money coming in, I would be looking at buying the dips on these things. A 10% correction in one day on a quality company that's now making... If you look at the underlying business now at the current metals prices... Let me look at the gold and silver prices now. If you look at the current gold and silver prices, a lot of these quality miners... This is not financial advice, just my opinion. Gold price is still at $15.26 per ounce in US dollars. Silver is still above 18 at $18.58. Those are prices that the quality mining companies and the quality royalty and streaming companies can still make, the underlying fundamentals of the business can still make a lot of money. Someone was asking about Sandstorm Gold. Sandstorm Gold's they have a new royalty coming online probably end of October or November. That's a Fruta del Norte royalty on the newest, highest grade gold mine in Ecuador. I think that mine is almost 80% done with construction. So that's going to help them out even more. They're going to have more diversified cash flow. It's not an enormous royalty, but it adds up. So if you're short-term oriented, you got hit. If you're thinking a couple years from now, so probably, again, just my opinion, not financial advice, probably a good entry point. If you can get Sandstorm Gold below 6 and they have record revenues with their gold equivalent ounce production and at current metals prices, Sandstorm Gold has a silver stream online too. 1 million ounces on their silver stream. So if the silver price goes to $30, $40 an ounce, Sandstorm Gold has a lot of leverage to that. Peter Schiff hates the U.S. the most because of what happened to his dad, Erwin Schiff, Derek. So I criticize the U.S. government routinely, but Peter Schiff doesn't criticize any other governments. He says the U.S. government does the worst stuff, and he hates the U.S. government. Yeah, Peter has a bias. He ignores a lot of data. I think he's a very smart guy. He's really good with Austrian school economics. But his bias is he hates the U.S. and he defends other countries' economies no matter how bad they are. Bill says he would hate the U.S. too if they killed his father. Yeah, I don't blame him. I don't trust any government, guys. The U.S. has a lot of problems, but other people in other countries who are professional money managers or private citizens with savings, they still look at the U.S. as safer on a relative basis. For now. This can change, but for now, the U.S. is looked at as safer. I still see, every day I see comments, I see articles, people telling me that China's going to dump all their treasury soon and collapse the dollar. I see it every day. There's a lot of people who believe this. There's a lot of demand for treasuries right now. No, I'm not one of them. I'm just saying there's a lot of demand for treasuries right now. And pension funds in the U.S., American insurance companies are legally required to buy pension funds. American insurance companies are legally required to buy treasuries. Okay? The average person does not know that. That means the insurance companies, besides the insurance companies speculating on collateralized loan obligations, the American insurance companies have to buy a lot of treasuries. The average person does not understand any of this at all. The average person does not understand that a bond fund manager can't hold cash. They can hold maybe 10%, depending upon the bylaws of the fund. They can hold a small amount of cash. They cannot go all cash. So they have to buy something. So on a relative basis, they have to buy whatever has a yield. So if U.S. Treasuries, if the 10-year Treasury has 1.5? Where is it? If the 10-year Treasury has 1.565 yield, and all the other bonds in other countries, government bonds, have inverted yield curves too, and have negative yielding or close to zero, what do you think the bond fund manager, who doesn't want to get fired, doesn't want to get blacklisted from his job, and has to earn a paycheck and maintain his job, doesn't want to risk career risk, and has to buy bonds, is forced to buy something, what do you think he's going to buy? Okay, I can tell you the bond fund manager is going to buy U.S. Treasuries. No, the bond fund manager bill is not allowed to buy silver. Actually, with his own money, some of these bond guys probably are buying gold, silver, and Bitcoin, but they're not going to go on CNBC or Bloomberg and talk about that. That's the problem with listening to all of this financial television. You don't know if the person is just talking their own book, if they're lying, or if they're spinning an argument just to promote whatever money they're managing and whatever fund they're managing, and what they're actually doing with their own money. So the person who asked if the Trump administration is aware of China's dollar shortage and is aware that China has a big derivatives position, probably with European banks as counterparties, on selling massive amounts of forward dollar swap derivatives, yes, I think the U.S. government now, probably until about 3 or 4 months ago, was not aware of it. I think they're very aware of it now. And I think it's part of the strategy. They're using it for leverage. In the short term, gold might go down. In the long term, a year, 2 years from now, we can have a lot higher gold price. Two years from now, guys, we might be over 1900. If things accelerate and get worse, it might even be faster. Just my opinion. Gold in US dollars is the only gold price in a currency that is not at or near an all-time high. Gold in every other currency is at an all-time high, at or near an all-time high. So what do you think the Fed will do? We'll wrap it up here. What do you think the Fed's going to do? If they do the 25 basis point rate cut, in my opinion, I don't know that would hurt the dollar that much, because on a relative basis, there's so many problems in the global economy that a 25 basis point rate cut, the market might just shrug it off and say, this is no big deal. And the dollar rally with the trade-weighted dollar index may continue. Because you have to look at things on a relative basis, because even if the Fed cuts a 25 basis point rate cut, what's the European Central Bank doing? The majority of the regular dollar index, or DXY, the majority of the regular dollar index is dollar-euro. So it's the Fed versus the European Central Bank. And the European Central Bank has talked about more rate cuts, more QE, and they want a weaker euro. The European Central Bank wants a much weaker euro. And for that to happen, it has to be a stronger dollar. You can't have... It's really difficult for... unless all these currencies are devaluing against gold. This is the same problems that the governments got into in the 1920s and 30s, is there was beggar thy neighbor and competitive devaluations, and one of the currencies had to remain strong, and this is why FDR devalued against gold. In 1930, he confiscated in 1933, he tried to take gold from American citizens. He banned the ownership of physical gold by Americans. He tried to confiscate. He put the gold, supposedly melted it and put it in Fort Knox. And then he devalued the dollar against gold. Because the dollar was rising, because everyone back then was very similar to now, was retreating into dollars. All the other economies globally had a depression or stock market crash, and a lot of flight capital came into here in the US. The flight capital came in massively 1927 to 1929. But the US was on an international gold standard still, post Bretton Woods. Okay, guys, well, I'm tired, so that's it. I thank you very much to my almost 150 Patreon account contributors and my almost a dozen now monthly PayPal contributors who signed up through my website. Thank you guys very much. I appreciate it. Everyone have a nice weekend. I do have, as of now, hopefully there's no rescheduling or canceling or anything. As of now, I have an interview with a hedge fund portfolio manager, global macro guy. Good research on Twitter, Octavio Tavi Costa from Crescott Capital tomorrow. So you guys will get an interview with a hedge fund manager that he's really good with research and analysis. The points he was predicting a big move in gold and silver in April and May. So he nailed this very, very well. He's been on Real Vision TV. He has a good Twitter handle to follow. He puts out a lot of very interesting charts and graphs. So it's going to be a fun discussion tomorrow. Okay, guys, bye for now.